Some of the most famous indicators in trading were built by Wall Street quants or Chicago floor traders. This one wasn't. It was built by a Japanese newspaper journalist, working largely alone, who spent decades refining it in private before ever showing it to the public. It's called Ichimoku Kinko Hyo, usually shortened to just Ichimoku, or the Cloud, and it remains one of the most visually distinctive, most complete trading systems ever created. Today I'm coding its core entry signal and backtesting it on 10 years of real EWJ data. And to make this test as fitting as possible, I'm not testing it on the US market. I'm testing a Japanese-invented strategy directly on the Japanese stock market itself. No cherry-picking, no curve fitting, just the raw numbers. Goichi Hosoda worked as a journalist for a Japanese newspaper in the early 20th century, but his real obsession was markets. Writing under the pen name Ichimoku Sanjin, roughly translating to a person who glances at a chart, he reportedly employed dozens of assistants over the years to manually calculate and test different versions of his system, long before personal computers existed to do that work automatically. He didn't publish his findings until 1969, after what he described as decades of research and refinement. That patience and thoroughness shows in the final result. Ichimoku isn't just one signal bolted onto a chart. It's a complete, self-contained analytical framework with 5 separate components working together, designed to show trend direction, momentum, and support and resistance all in a single glance. The system centers on 5 lines. The Tenkan-sen, or conversion line, is a fast-moving average of the past 9 periods. The Kijun-sen, or baseline, is a slower average covering 26 periods. When the fast Tenkan-sen crosses above the slower Kijun-sen, that's often called a TK cross, and it's one of the most common bullish entry triggers used with this system. But the real signature of Ichimoku is the Kumo, or cloud, a shaded region on the chart formed by 2 additional lines, Senku span A and Senku span B, both projected 26 periods into the future. This forward projection is deliberate. It means the cloud you see ahead of current price on the chart was actually calculated using data from weeks earlier, giving traders a visual sense of where support and resistance are likely to sit even before price gets there. When price is trading above the cloud, the broader trend is considered bullish. When it's below, bearish. And when price is inside the cloud itself, the market is generally considered to be in a period of consolidation or transition, without a clear trend in either direction. It's worth pausing on how differently Ichimoku approaches markets compared to most of the Western indicators covered on this channel. Tools like MACD or RSI tend to isolate one specific dimension of price action, momentum, or overbought and oversold conditions, and present it as a single line or oscillator, deliberately stripped down for clarity. Ichimoku takes essentially the opposite approach. Rather than isolating one signal, it tries to present an entire multidimensional picture of the market simultaneously. Short-term momentum through the Tenkan-sen, medium-term trend through the Kijun-sen, and a forward-looking projection of support and resistance through the cloud itself. Reading an Ichimoku chart properly means processing several layers of information at once, rather than following one clean line up or down. That density is often what makes the indicator look intimidating to newcomers, and also what makes experienced users describe it as a genuinely complete framework rather than just another add-on tool. For this backtest, I'm combining 2 of the system's core signals rather than relying on just one in isolation, which is closer to how Ichimoku is meant to be used in practice. The entry trigger requires both the Tenkan-sen crossing above the Kijun-sen and the closing price sitting above the cloud at the same time. Requiring both conditions together is meant to filter out weaker signals. A TK cross happening while price is still stuck below or inside the cloud is generally considered a much lower conviction setup than one confirmed by both the crossover and the broader trend structure agreeing. For risk management, I'm using the same volatility-adjusted trailing stop used throughout this channel, 2 times the average true range. Testing a Japanese-invented indicator on a U.S. tech stock or the S&P 500 would have been the easy, obvious choice. Instead, I wanted to test it in the environment it was actually built to describe. EWJ tracks a broad basket of major Japanese companies, giving a reasonably representative picture of the Japanese equity market as a whole over the past decade. A market with its own distinct character, shaped by decades of near-zero interest rates, a different corporate governance culture, and a very different relationship with inflation than the U.S. market most trading strategies get tested on. Here's exactly what I tested. Ichimoku Cloud strategy, applied to EWJ, using 10 years of daily price data. Starting capital was $100,000. Every signal requiring both the TK cross and price above the cloud triggers an entry, mechanically, with no discretion involved. So how did one of the most elaborate trading systems ever created perform on 10 years of real EWJ data? The strategy executed 35 trades, with a win rate of 31.4%. Total return came in at minus 8.5%, working out to a compound annual growth rate of minus 0.9% per year. For comparison, simply buying and holding EWJ over the same period returned plus 147.7%, or plus 9.5% annually. The strategy's maximum drawdown, the largest peak-to-trough decline an investor would have had to sit through, was minus 12.3%. Requiring two conditions to align simultaneously, the crossover and the cloud confirmation, naturally means fewer trades than a system relying on either signal alone. That's a deliberate trade-off built into how most traders actually use Ichimoku in practice. The system was designed around the idea that a handful of high-conviction, well-confirmed trades tend to outperform a larger number of weaker, unconfirmed ones, even if that means sitting out for extended stretches while waiting for full alignment. It's also worth acknowledging that this backtest only scratches the surface of the full system. Traditional Ichimoku analysis also incorporates a fifth line, the Chiku span, which plots current price shifted 26 periods into the past to check for confirmation against historical price action, along with a range of additional confluence rules experienced practitioners layer on top. What we tested here captures the core mechanical heart of the system, not its complete, nuanced form as originally intended. A dedicated follow-up test incorporating the full 5-line system, rather than this simplified 2-condition version, would be a natural next step for anyone wanting to explore this indicator more rigorously. What's remarkable about Ichimoku, more than 50 years after its publication, is how little it has needed to change. Unlike many indicators that get endlessly modified, reparameterized, or combined with newer tools, Ichimoku is still used today largely in its original form, on its original settings, by traders all over the world, a testament to just how much thought Hosoda and his assistants put into it during those decades of quiet, unpublished research. There's also something worth noting about the cultural journey of this indicator. Despite being built specifically around Japanese market rhythms and originally published only in Japanese, Ichimoku eventually spread globally, and today it's applied just as often to U.S. stocks, currency pairs, and cryptocurrency charts as it is to the Japanese equities it was originally designed around. Testing it here, on the market it was actually built for, is in some sense closer to its original intent than most of the ways it gets used today. That's the Ichimoku Cloud strategy, coded and backtested on real data, a Japanese-invented system, tested on the Japanese market it was born to analyze. If you want to see more classic strategies tested this way, no hype, just numbers, subscribe.